have no higher priority than making America affordable again. That's what we're going to do. And again, they caused the high prices, and we're bringing them down. It's a simple message. And we're bringing those prices down rapidly. Lower prices, bigger paychecks. You're getting lower prices, bigger paychecks. We're getting inflation. We're crushing it. I mean, the only thing that's really going up big, it's called the stock market and your 401ks.
That's President Trump in Pennsylvania this week, touting America's economic gains under his leadership. The president promising to keep lowering prices and inflation for the average American ahead of a challenging midterm election cycle. Now, yesterday, the Federal Reserve cut interest rates for the third straight time by 25 basis points. We all expected that. Joining me now is O'Leary Ventures Chairman Kevin O'Leary. Kevin, great to see you. Welcome. Did the Fed make the right move? What is your expectation for the Fed in 26?
I don't think we'll get any more rate cuts for quite a while.
Wow.
Inflation's 3.1%. This was a lot of dissent here. At least 3 said no. I don't recall in recent times that much dissent, which is telling you we're getting to a place where there's a lot of uncomfort. Because remember this dual mandate, and you've been talking about it forever, Maria. The mandate's 2% inflation and full employment. We're at 3.1, and the tour the president's making now is about high cost affordability. That's sort of one of the metrics that's been winning elections, notably New York City, and that's a big warning sign. And so what's going on here is a real debate within the Fed, and I really don't see Powell coming out of the new year and doing any more cuts. You're going to just keep getting more dissent because they don't see it going down. Either you make one or two decisions. You say the new normal is 3% inflation, which I don't think they're going to do, or you stop cutting rates until it gets below 3%.
Yeah, it's a good point, and you're probably going to have a similar dissent regardless of who the chairman is, right? I mean, you're saying no more rate cuts for a while. Well, then I push back and say, well, wait a minute. President Trump is going to, choose the next chairman of the Federal Reserve, who is likely in the same camp as President Trump, wanting rate cuts. Are you saying regardless of who the chairman is, like if it's Kevin Hassett in 2026, you still don't think we're going to get rate cuts because of the dissent on the board?
It's imperative for world markets and the debt market, particularly the issuance of long treasuries, that the Fed remain independent regardless of who the executive is. The whole world believes that's the case. It's not just what any executive wants or what any president wants. Fed bashing is sport in Washington. I love it. It's so entertaining.
Yeah.
But the Fed never listens to the executive and never has. And the world believes that. If all of a sudden it was like the Supreme Court where you can drop in your own judge, and I think, people understand how that works, whether it's conservative or liberal. You can't have that in the Fed. You just can't have it. Otherwise, the bond vigilantes, and you know who they are, come roaring back into town and bad outcomes occur. Right now, there's a lot of uncomfort around Hassett because even though he's a great economist, he has really been a spokesperson for low rates policy, which is not a bad job, except that's not what a lot of people want in the bond market for chair of the Fed. Now, the chair only gets 1 vote, but can be very persuasive. There's 19 votes.
Yeah.
But it's not comfortable if you think the executive can actually manipulate rates. That's kind of got like a Venezuela vibe to it, Maria.
Well, look,
nobody likes it.
Yes, he wants lower rates, but he's also a supply side economist. I mean, he's looking for the supply side of this economy to lead here. Mark, you want to weigh in here?
I would love to. Kevin, look, I agree with you. I believe that the Fed needs to maintain independence. That's crucial. But, at the same point in time, you look at Jay Powell and just how far behind the curve and how wrong he's been over the course of the last several years. Number one, calling inflation transitory. Then it goes up to 9.1%. Second thing, saying tariffs are inflationary. Well, maybe a few weeks ago, maybe a month ago, the San Francisco Fed came out and said, oh my, look at this. Tariffs are actually deflationary because demand goes down. So, I mean, what do you have to say about that kind of a situation where we have a Fed who is constantly behind the curve and they're not acting proactively?
Powell was a pandemic chair, and actually, if you held on to your shares of the S&P 500 during his mandate, you've done phenomenally well. So it's really hard to bash them for long-term outcome. And Fed bashing, as I said earlier, is just appropriate sport in Washington. But now it's a different situation because every chair gets criticized for being either too early or too late.
Okay.
That's always the case because all they can do is work off past data. But now I think we're in a situation where we've got a big spread between the mandate 2% and the reality of inflation 3.1.
Yeah.
That's uncomfortable, and that's why these long rates are stubbornly staying up.
Well, look, you want to talk about politics and politicking at the Federal Reserve. Let's not forget cutting interest rates by 50 basis points and then cutting interest rates right before a presidential election and also jamming through all of these DEI policies in the Fed. But that's another conversation. I was thinking that the Fed meeting is going to be the last major event for markets of the year, but I'm changing my mind here because I think what's really going to be the big mover for the markets is this upcoming Supreme Court hearing and this upcoming Supreme Court decision, rather. The Supreme Court had its final hearing, the oral arguments of the year yesterday. That's it. It's over. This is now telling us that this suggests any year-end decisions on the IEEPA, the emergency ruling, it's imminent. The legality of President Trump's tariff authority remains in the balance. The decision is going to come any day between now and the end of the year. The president has been touting the success of his tariff plan. Watch this.
Remember when I said tariff? My favorite word is tariff. You see it with the big factories that were, 2 years ago. Now it's starting to fill up. The tariffs have filled it up because people are coming here. They don't want to spend 100%, 50%, 25% on tariffs. They're all coming in. We've taken in hundreds of billions of dollars, really trillions. All of the companies that are pouring their money to building plants in Pennsylvania and many other states, auto plants, AI plants, plants of every type, which we would have never had if we didn't put the tariffs on.
So what are you expecting here? The big question is the Treasury going to have to pay back $100 to $200 billion in tariff revenue already raised? Do you expect the Supreme Court to rule against the administration?
No, I don't think that's going to happen. I think fundamentally the executive, the president, whoever that person is, has the right to implement trade policy. Now, you can debate whether these tariffs are too high or they're too, they're not reciprocal, because the VAT taxes in Europe are more like 10%. And we've put as much as 25 up to 39% on some of those European countries. But that's a different decision. I'm just saying I think the president should have the right to implement trade policy, and tariffs are part of trade policy. I don't like the idea that all of a sudden the Supreme Court can take that right away. That doesn't feel good to me, and I don't think they will.
Yeah, look, they have a number of alternatives. There are constitutional statutes like 122 and 338. They'll probably come out with those statutes within days, should the SCOTUS rule against them, to try to replace that money. But I'm interested in hearing you believe that the SCOTUS will not rule against President Trump. And certainly there are a fair amount of emergencies to talk about, beginning with fentanyl and those fentanyl deaths. Kevin, it's good to see you. Thanks so much.
Take care.
Kevin O'Leary, good to see you. We'll be right back.